Good evening. I'd like to call this Tuesday, May 25th, 2021 Board of Finance meeting to order. I would like to move for the approval of the minutes from February 23rd, 2021 Board of Finance. Do I have a second? Second by everybody. Thank you so much. But we'll say Commissioner O'Malley was first. And all in favor signify by saying aye. Aye. Madam Clerk, could I have a roll call, please?
Yes, sir. Commissioner Barboa.
Aye.
Commissioner Benson.
Aye.
Commissioner O'Malley.
Aye.
Vice Chair Quesada.
Aye.
So call, sir.
Thank you.
Oh, you're on mute, Commissioner.
Oh, I clicked the other way. I clicked the other way. I'm sorry. We will move on to item 3, which is our presentation from our great county treasurer, Board of Finance report for May 25th, 2021.
Good afternoon. Thank you so much, Chair and Commissioner. Appreciate the time. Yes, I am Nancy Bursch, your County Treasurer, here with your quarterly report for the quarter ending March 31st, 2021. Hopefully you noticed it's, first of all, in a different color, and we've got a whole new format for it. So appreciate any of your comments. We're rolling out the new format for you on this one, and I hope you like it. So there's our agenda that's in the packet of things we're going to go through for today. First, we start with the property tax collections. And you see there we listed the most current 3 years. And you're most interested in this current year, 2020, where as of March 31st, we had collected 304 million, or no, we had collected 451 million dollars out of the 756 million that we were tasked to do, which left us a little bit of money to still collect. Remember, we weren't in second half collections yet. That started in April. So this is that kind of strange quarterly cutoff that you see. Let's see, next slide. So here's what the tax collections look like for the full 10 years that I'm responsible for. And again, you see we have a very high rate of return of collected amounts. And let me just update you as well with what we just finished collecting. I'm sorry to do this. Kenny, can you go back to the slide before? So you saw there where we collected 451 million. It's nice to report to you today. We ran the number, so it would include up till today. We collected $715 million. So we did a good chunk there in April and May. That means that what we have left uncollected is just over 42 million. So yeah, thank you, Commissioner Barboa. We did much better. And when you go to the next slide, I can tell you that when you look at the tax year 2020, that 59.73% that we had as of the quarter ending March 31st jumped up to 94.4%. So just in those 2 months, we collected almost 35% more in taxes. So that just kind of tells you second half collections for each tax year is pretty big. I do want to again talk about delinquent taxes because that delinquent department is collecting all the time, every day, except Saturday and Sunday. But they do a wonderful job. And one of the things they just finished with was a commercial property that was on the I-25 corridor that had 3 years outstanding. 2018, 19, and 20 were delinquent. And they collected, one person that was on the account collected finally everything that they owed, which totaled $544 million. So that was absolutely huge. And when I thought about that and I looked at that amount, I went, oh my goodness, that is over my annual budget just for my office. So we just paid for ourselves in that collection. Kind of puts it in perspective there for you. But we're really doing well, and I know that we were concerned, very much so, in this COVID time about being able to collect. Also know that, last year's special session had that extension of the second half 2019 taxes. We did have, when we ran the numbers, we did have just over 500 people that still owed that amount as we were going into the second half collections. And we did send out emails if we had them. And then we also made outbound calls to those that we had phone numbers for, which was about 300 people. So it was really a real endeavor to have staff place those 300 calls just to say, as a reminder, your taxes are due, and we just wish you the best and hope you're doing okay through COVID. So we wanted at least to do some outreach there. Next slide. Here's kind of your graph of what's going on in collections. Again, remembering this is March 31st. So in the top left, you have the call volume that we had for that quarter. And you can see it, it was actually going down in March. You'll see this, the next quarterly report in August, which you'll see all the call volume that comes up for the second half of collection. But this is a pretty normal quarter when we're not collecting tax dollars. And then, of course, the underneath that is the delinquent account turnover to the state. Of course, this doesn't change. We turn it over to them every July. So this is a stable number. And you saw that we did turn over 750 properties to the state that were 3 years and older delinquent, and then they collect for those property taxes. We get our money, but they have to do the collecting, and they keep the interest and penalties on that. Then on the right, you see the delinquent collections chart, just to show the different types of delinquent collections. The green is the manufactured homes. The gray is personal property, which is like business equipment. And then the light blue is real property. And then the total is in the darker blue. So we just wanted to show you a year comparison, month to month, how it looked. When we met with you, one person caught, why is January of 2020? Why is that total so tall in that chart? And just to remind you, we did have the 2019 taxes that were delayed because we had actually an APS bond issue on the voter roll in November that year. And so the tax bill couldn't come out until after the election to know how the voters wanted to vote on that, to to have the bond or not. So we didn't get our tax bill out till December, and then we really collected in January, our December, January first half collection. So that's why that's so high. Next slide. And it's a good thing as I take a hot beverage that it's time to change to Kenny, where he's going to talk about, or Deputy Scott, the bank balances and collateral.
Thank you, Madam Treasurer. Again, my name is Kenneth Scott. I'm the Deputy Treasurer, and I'm just going to go over our collateral slide here real quick. First things first, a point of order. I'm driving the presentation as well, so if you have a question, don't feel bad by just shouting at me. Completely fine.
Excuse me.
This slide is a little different than you've seen in the past. As you can tell, we've actually broken down a few more accounts within Wells Fargo. And the thing is, you should realize that it's a point in time. So this is a point in time comparison of where our collateral is, which speaks directly to our safety. Wells Fargo is required to collateralize at a 50% rate. As you can see on this slide, they are well above that because at that point they needed 30 million. So we're actually, as of March 31st, we were over collateralizing our main account. And again, we also broke out the housing nonprofit in San Miguel County because those have different tax ID numbers, which means that they also get the 250,000 in FDIC coverage in addition to our other accounts. But as you can see, those are also well collateralized. And then finally, on the right side, you see our ICS accounts. Remember, that's the chunk of money that we've separated into under 250,000 so that we could get the FDIC insurance. And of course, those accounts are fully collateralized. And then at the very bottom, you have our repos that we must hold for debt defeasance. Those are actually over collateralized at least 106%. And as you see, we're meeting that criteria as well. We wouldn't sell those even if we wanted to, because we still get that healthy 6% that we won't get anywhere else. So quite frankly, we have to keep that. Next slide. Why is safety important, right? And it's because of economics. We want to make sure that we're always in a really good position for the county. And just right here, I'm going to give you just a really high level economic update. I'm not sure if everyone's aware, but myself and members of the county, we typically go to the UNM Bieber Bureau of Business and Economic Research talk every single quarter. Shout out to Heidi and Tim from the Finance Division for always keeping me on track there. And then they go through a lot of our numbers. And one thing that Madam Treasurer wanted to do is bring that to you guys so that you guys can see at least what our landscape is. And if you have any changes that you would like to see, I know we probably should see more slides on this, for example, for New Mexico specifically. Let me know and we can absolutely change this. But one thing that I want to say is I think the tone of the last meeting and the general consensus is that things are really positive as far as economic environment. We had a 6.4 GDP growth in the first quarter of 2021, driven primarily through consumer spending. And they actually anticipate that it's going to go higher as things open up a lot more. The unemployment rate actually declined to 6.2 as of March, but then it went up a little bit because we didn't have as many job creation numbers as we wanted to in April. We were expecting 1 million, we got 266,000. So it creeped up a little bit, and I'll talk about that in a second. And then obviously we had the ISM manufacturing. I'm not sure if you guys are familiar with ISM, it's the Institute of Supply Management. And they actually do a manufacturing and a services survey, but basically they send that survey out to managers and just ask them what their expectations are for the economy. And anything above 50 is expansion, anything below 50 is contraction. And in March, we had a 64.7 rating in that survey and 60.7 in April. And I don't know about you, Ash, but I think that's kind of like one of the highest that we've probably seen in the last decade. It was a really, really good number, which portends that people obviously believe that things are going to still continue to get better. That being said, there are areas of concern. There are areas that we still should be totally cognizant of. One being, for example, is COVID-19, still a pandemic that hasn't changed. Vaccination rates are starting to slow a little bit, but we even got good news on that front today. I don't know if you guys were paying attention, but today was the day that they reported that 50% are fully vaccinated in this country. It's absolutely outstanding. And here in New Mexico, if I'm not mistaken, we've actually hit the 70% threshold. We're one of 9 states that have done that. That's also just amazing news, not only for this country, but even for the state of New Mexico and certainly Bernalillo County as we start getting things back to normal. There was a recent spike in inflation. If you guys were watching CNBC as much as I do, hopefully you guys don't, but I'm a little bit of a nerd. You kept hearing how it was transitory. The Fed and a lot of experts believe it's transitory, so they were expecting a spike. I want to remind everyone that they believe, the Fed, that this was coming, but not only that, but they want the economy to run a little hot. Me personally, I'm not so sure it's transitory, if I'm being completely honest with you. I think that's something that we definitely have to sort of keep in the back pocket, that this might be the canary in the coal mine. I hope I'm wrong. But one thing that concerns me is that you see inflation in a lot of different pockets, whether it's commodities, whether it's wages. And that to me might suggest that there's a problem. Speaking of wages, the labor shortage, and I'm not making any kind of political statement here, but I think it's really nuanced. You have people who say that there's just way too much Fed money, and that's why people don't want to go back to work. Then of course you have the other side that, like, hey, pay people more and they'll work gladly. I think it's a little bit nuanced, if I'm being completely honest. I think there's some of both of that in the markets. And so that's why you start seeing sort of that shortage. The funny thing is I considered, like, I thought I'd see wage inflation 2 years ago when we were basically at record low unemployment. But now, like I mentioned earlier, like I go to McDonald's a lot and they pay $18 an hour starting at McDonald's, right? So you just see that incredible jump in wages. So maybe that might be something to look at. And then finally, New Mexico lagging. One thing that is talked about at all of these UNM-BEPR discussions is that for whatever reason, New Mexico tends to lag behind the national recovery. Hopefully that doesn't happen this time, but it's definitely something that we need to take into consideration. I'll pause there real quick just to make sure there's no questions before I move on. I can't see any and haven't heard any, so.
Commissioner Benson.
Yes.
Thank you, Chair. And thank you, Mr. Scott. Actually, though, I think we should expect New Mexico to lag, considering our unemployment was higher than the rest of the nation, and just kind of prepare for that. And then if it turns out that we don't, then it will be pleasantly surprised. I think it'll be probably better for us if we're planning on a lag. Just my 2 cents. I hope we don't lag, and I pray that I'm wrong. And if I'm wrong, I think you and I will both be dancing and high-fiving.
Oh yeah.
But in the meantime, right, I think if we plan on a lag, we'll be better off than if we don't.
You're 100% correct there, Commissioner. The reason why I put that on the slide actually is because historically that's what happens. I mean, when you look at the financial crisis from a decade ago, New Mexico took longer to get out of that than the rest of the country, and that tends to be the case. I don't know. I'm hopeful for New Mexico. This is my home. I'm hoping that we just fight through this and get through it just as quickly as the rest of the country. And that obviously would require us to work together to get people back on their feet and get businesses back running at normal clip. I know a lot of people can't wait to get out and do things, and that's a good thing. And that'll help us out a lot, I think. A good question. Anything else before I move on? Again, I'm sorry I can't really see anyone, so.
I can't see everybody, Keith, so if somebody does have a question, please go ahead. The screen, I can only see 4 people at a time.
Good deal. So this is the operating portfolio breakdown. I'm not going to spend much time here because we talk about this all the time, but essentially this is the 3-bucket strategy. Obviously, the operating funds is comprised of the high liquid and the liquid ladder. High liquid is 15% of our budget. And then the core is the DFA required 3/12 reserves and the 5% that's actively managed by public trust. And just one thing that I will say here, we've changed up the format. So I'm going to take the high liquid bucket and then I'm going to pass it on to our good friends at Public Trust, Ash, and he'll take care of the liquidity ladder and the core. So investment strategy. So this is the sort of the summary for both the operating funds portfolio. So that includes the highly liquid and the liquid. And there's not really much to talk about here. We had 89 million as of March 31st in the LGIP. And some people might say, well, why? Why do you have such high balances? They're paying the best right now. It's so funny. You know, a year and a half ago, I was basically telling people that they, you know, we needed at least 2%, right? Now we're lucky to get 0.06%, and that's what LGIP is paying. And so that's why it has a little bit more of our balances than they usually do. And I think we even added a little bit more currently. And then of course we have the ICS account that we had 84 million, and then the 134 million that's in the liquidity, that's investment type public trust, treasury and agencies. That's the liquidity ladder that Ash will go into a little bit more. And then finally, you have the Bank of America repurchase agreements. Again, we wouldn't sell those even if we could, because we get 6% on those. So that just has to stay. I'm sorry, that never will go anywhere. Next slide, I'm going to throw it over to you, Ash. Take it away.
Great. Can everyone hear me?
Yep, we're good.
Yes.
Thank you, Ken. Thank you, Commissioner. Thank you to the Board of Finance. This is a pretty standard format. We did change it up a little bit so we don't have to switch slide decks. So it's now integrated, but this is the same portfolio review we've seen a few times. So not a lot to comment other than I'll comment on some of the changes that we have made since this report came out, since it is about 2 months old now at this point. The liquidity ladder is a stack of a series of investments that mature every month. It's 5 million a month minimum for the first 12 months, which is 60 million. As of today, the ladder extends out to July 15th of 2023, which is approximately 26 months, 25 months. So there is quite a bit of excess capital in that account. It's actually currently valued at about $137 million. So the minimum for that account is 60. We have 137 million in there. So we are excessively liquid in that account, to go along with pretty much almost all the other accounts that the county has right now. So next slide, please. Again, pretty similar page. We've seen this a lot. What you may notice in the top right of the screen here is the December 31st balance of 347 million versus the current balance of 137 million. On a yearly basis, the county will take excess funds for about a month or so and invest it out and put it into this liquidity pool. So they added about $210 million this year, which sat in the account for a little less than a month. Now, just to highlight that the current yield environment that we're in, last year, we moved $160 million into that account, and we earned $219,000 in the 1 month that we were in the account. This month, this year, with that same account for 210 million, we earned 12,530. So basically, what we're saying, and what Ken was kind of alluding to earlier, is the yields out there are just at the lowest they could possibly be without being negative. You know, the whole country's facing this. All municipal entities now that are flush with cash are also trying to scramble to find places to put cash. Just the environment that we're in, and basically what we're trying to do now is solve the liquidity problem, the excess liquidity problem, and we can talk about that on the next slide, Ken, if you move over to the core portfolio. Again, longer term yields are moving a little bit higher over the last 3 to 4 months, but again, short-term rates anywhere from 0 to 2 years are extremely low. For the core portfolio, which is basically what we consider the long-term savings account for the county, we do have it benchmarked against the 0 to 5 year Treasury index. We do try to maintain you know, our allocation similar to the benchmark. However, depending on when the cash is available and what the cash purposes are, we may or may not be able to match durations to the benchmark all the time. Again, and this is quarterly approved by the Board of Finance and the county treasurer, and we will be sending out a authorization to continue trading the account here shortly. Next slide, please. Again, so there's 112 million in this account as of March 31st. One of the things we did do to shore up the liquidity problem is we did add about $30 million to this account to push it up to its $140 million limit. Also, because there was a little bit of drift from the benchmark, we pushed the money out into for longer term duration to take advantage of a yield spike in farther out maturities, and we were able to allocate the funds out anywhere from 3 to 5 years in 6 different sleeves that all mature anywhere from April of 2023 to March of 2026. That brought the duration from 2.1 years up to 2.35 years. which again, we didn't put a majority of the money farther out and it didn't shift it too much, but we did find a way to meet the benchmark a little bit further so we can kind of gauge the performance of the portfolio. Are there any questions on this? All right, next slide, Ken. This is the performance numbers. You know, we've kind of already talked about what's happening in the market. The yields are at an all-time low. What gains we did see last year in unrealized gains have started to normalize. So we're seeing what it shows as negative. It's not necessarily negative. It's just negative based on the time frame, and that's due to the shift in yield curve moving up. And we'll just move on to the bond portfolio as well. So the bond proceeds portfolio has a very simple strategy. We match investments to the months that bills need to be paid, and whether or not that's accurate. We've been fairly close over the last couple of years. So kudos to Tim and the finance team over there. We do discuss this on a monthly basis. At this time, we do have some excess capital that hasn't been reinvested, but we are increasing liquidity just to make sure we don't overspend or overinvest when cash is needed for the portfolio. And then also, again, these accounts are approved. The trades are approved by both the Board of Finance and the County Treasurer's Office. Next slide. So this is the bond proceed portfolio as of March 31st. It's, again, like I said, it's matched out to a monthly expense. So there's really no benchmark to measure its performance. I do want to highlight, however, we did take the current bond proceeds and we were able to invest those out. That was $27,355,000 plus, and it was laddered over the next 4 years to match the cash flow draws there. All of these funds right now are performing, fairly decently. We were able to push out duration in some of the accounts, and we did actually push out duration prior to the pandemic. So we were able to benefit a little bit from the drastic change in interest rates. But right now, again, going forward, we do have a liquidity problem pretty much everywhere. And so yields are going to be compressed for the foreseeable future, at least until 2023 is what our team is saying. So if we do want to get yield, we are pushing that investment out more than 2 years. And so there is some caveats with that. I'll turn it back over to you now, Ken, I believe, for the next slide.
Yep, that's me.
I'm going to jump in. I'll jump in real fast just to remind the Board of Finance that when we talk about our bond proceeds and how we meet those by staggering them out, just a reminder that that dovetails with the debt management policy, where we do take that bond money and invest it out to match those capital projects. So just to make sure that we do talk about this every month, as Ash reminded you, but also it's also policies are dovetailed together to work in conjunction, hand in hand. So just a point there. Go ahead, Deputy.
Okay, so this has historically been my favorite slide. Not so much this year, considering our dramatic decline in yield, but I should stop saying that. And the reason why I should is because, yes, we are still making a positive return and we're doing it in a safe and liquid manner. We're not, gambling on interest rates or anything like that. I think one of the important parts that Ash mentioned was, us using that little extra that we had in the core to push some money out, but also to capitalize on the spike in interest rates that we saw. I think that really shows the coordination between public trust, the Treasurer's Office, Madam Treasurer, Finance, and everyone to make really good decisions that benefit the county as a whole. Again, not happy that it's only 1.1 million as opposed to last year when it was 2.4 billion in net investment income over all accounts. But I'm really proud of the fact that we do it in a very safe and efficient manner. And we'll hope that we're going to continue to do that so that we can give really good benefit and value to the county. But yeah, that's about a 50% decline over what we did last year at this time, and about a 25% or so decline over Q2. But still, like I said, in a safe and efficient manner. I'm gonna stop there before I turn it over to Madam Treasurer. Is there any questions for myself or Ash before I flip it? Okay.
Do we have any more questions? No? Okay.
Right. Madam Treasurer?
Wonderful. This is the slide where we just kind of catch you up on what's going on in the office. Some of this I've already talked about, but like House Bill 6, with the 2019 second half that was delayed by the legislature till May 10th that we tried to collect for, and the collection update for second half of saying we've collected much more than what's in this quarterly report because the quarter is March 31st. But I just wanted to give you a heads up on that. Additionally, I wanted to let you know that we did find out about New Mexico Mortgage Finance Authority that did receive money. The state received money for mortgage assistance, just as it received money for rental assistance. There's also mortgage assistance that is out there. I know they were just getting in their money for the rental assistance program this year, and they were doing some separating of funds between the mortgage and the rental, and doing some website updates. So I'll be working with them on letting people know and getting that word out. I think I don't know if you watch any TV. I know I've seen many commercials on the rental assistance, but zero on the mortgage assistance. So I want to work with them on really getting that word out, because it's going to be a vital program. You know, if we're still having over 500 people that weren't able to pay their 2019 second half, there's still a lot of financial pain out there from COVID. So let's try and give them as much assistance as we can. So I'll be working on that, and I'll obviously I will help with you in your commission districts to also get that word out, because I think it's important that we still continue to have that outreach to community while we still have COVID around us. The other one is the tax lightning case update. We were able to go to the courts and get the information that we needed on some of these old tax lightning cases. We hadn't received any information, so that money sat in a suspense account. And we really wanted to get through that this month so that next month we can pay all those entities all that money that we could unsuspend. And again, June being the last month of the fiscal year for many of the entities, we thought that would be a great way to end the fiscal year for them, and for us, because we get a little bit of that too. So that helps all the community for Bernalillo County. The other is just the new report format. Hope you liked it. If not, always call or email us. We're here to make it the best report that we can. And lastly is the annual internal audit. Had another great year for the internal audit. That really just looks at our investment policies to make sure that our policies and procedures match with what we're doing, the business that we conduct. And yes, it does. We had one little mention of what was on the internet wasn't everything that was supposed to be there from a reporting standpoint. And we realized that that was an off month where there were some changes going on at Public Trust, and we didn't get those reports in as we had the month before. So we now created a checklist to make sure that all those financial reports are put on the website for the public and for us internally. So that was done, but that was the only thing that was found. And we appreciate that oversight and keeping us true to our word. That's what it's all about. So if we have no other questions, then that ends our presentation. But I stand for any questions or discussion, feedback, good or bad. We're here. Let's talk.
Thank you, Madam Treasurer. We appreciate your report as always. It's always very informative and easy to understand and easy to read, which is very important. So we appreciate that. If we have no more questions, we do. Commissioner Benson and then Commissioner Barboa.
Thank you, Commissioner Chair. Not a question.
You're muted, Commissioner.
You put yourself back on mute, Commissioner.
Oops.
Thank you, Commissioner. I don't have a question, Madam Chair, but just an observation to you and your hardworking team. Well done on the collection of that $500 million property tax off of I-25. I don't know if I should feel sorry for the individual who paid it or envious. It's one of those good problems to have, I guess, if you owe $500 million in taxes.
You can write a check.
Good job.
Thank you very much, Commissioner. And Mr. Chair, appreciate that.
Commissioner Barboa.
Thank you, Chair. And just to repeat, but also add to what Commissioner Benson said, right? Just for that collection too, but also I know I talked to you and seeing the numbers add up and how May and April and May was that collection. And I know when you met with me, when you and Deputy Scott met with me, that it was clear that you all take the effort and initiative into calling folks, giving that personal touch, which I think now in the age of Zoom and all the things, we forget that some of our families aren't on email, aren't on Zoom, and that's what they need to be able to do what they want to do to keep their properties so I just want to give you more and more kudos to your team and for your leadership in really making those things happen for our families and communities.
Okay.
Mr. Chair and Commissioner, thank you so much for that. We really do feel like any contact we can make, we're there, we do it because taxes aren't always easy to understand, and putting a personal touch on it is so beneficial. They'll never again hesitate to contact us if they need anything. So it's a win-win for all of us. Thank you.
Thank you so much, Madam Treasurer. With that, we'll move on to advice and consent, item 4A, the quarterly investment strategy. So this is a motion to give advice and consent to the proposed quarterly investment strategy as outlined in the Board of Finance report. Do I have a motion? I have a motion by Commissioner Benson. Do I have a second? I have a second by Commissioner Barboa. Madam County Clerk, could you do the roll call, please?
Yes, sir. Commissioner Barboa. Commissioner Benson.
Aye.
Commissioner O'Malley. Vice Chair Quesada.
Aye.
So called, sir.
Thank you. Thank you, Madam. So that is it. The announcement of the next Board of Finance meeting will be Tuesday, August 31st, 2021, Board of Finance at 4 p.m. Go eat lunch. Go eat dinner. We have another meeting coming up. And what's lunch? There I am. Yeah, that's that nightlife. I'm kidding. And we will see you all in a minute. This meeting is adjourned.
Thank you.